What's up, guys? So in this video we're going to talk about one simple tweak that I did that completely changed my trading around. Okay, and you can do it too. It's actually so easy to implement. It literally changed my entire trading. So let's go ahead, and if you stick into the end, I'm going to show you some examples, show you how this can help your trading out a lot. All right, so let's go ahead, let's get right into it. So when it comes to this simple tweak, all right, now let me ask you guys this. How many times have you been told by somebody teaching you online, somebody doing whatever it is, telling you that you should go for a minimum 2 to 3 risk reward ratio? Okay, this is very common in the trading space. A lot of people say you should have a 2 to 3 risk reward ratio. Now, having a 2 to 3 risk reward ratio is not bad. Okay, at the end of the day, everybody's strategy is different. Okay, and everybody, that's a good risk reward. Don't get me wrong. If you're doing this, you can have a 50, 40% win rate and still make money. Okay, so it's very good to have this. Now, the reason that this actually wasn't good for my trading was because the strategy I was doing wasn't working out for it. Okay, and it's just based on my personality, based on my trading. I found that going for these risk reward ratios, I became very greedy. I started not taking profit. Price would get close to my target and then just end up dumping. And I wasn't making money doing this. And so I decided, okay, let me go ahead and implement a quick fix. Let me just go for, one-to-ones, one, or, maybe a 1 to 1.5 risk reward. Okay, so a lot smaller risk rewards. And what ended up happening was I started to see a lot more wins. Okay, I started to see a lot more base hits. Okay, a lot more consistency in my trading, right? I started to see a lot more just overall profit, okay? And this is what I really want to deep dive into this video of, is that you guys don't need to be going for these crazy risk rewards. People always tell you, oh, you need to be, catching the exact top, risking just a tiny bit, going for these 7, 8, 9 risk rewards. You don't need to do that. Now, again, let me phrase this. Going for bigger risk rewards, or even 2 to 3 risk rewards, can be a good thing. All right. At the end of the day, it all depends on what your strategy and what you're doing is. But let me show you some examples of why doing this helped my trading out a lot more. All right. So if we look at something like Google, okay. Let me go ahead and do this. So Google, let's say we have this demand zone down here. All right. So we see, on a daily or weekly time frame, we have this demand zone down here. All right. We'll draw it like this. Okay, beautiful. So we're in an uptrend, right? Price starting to make higher highs, higher lows, and we're in this phase here. Now, when price comes down, we come into this demand. Now, this may not be the best example, because you can see, this demand ended up working out really, really well, right? Ended up going about a 4 or 5 hour trade. But if you want to have more confirmation in your trading, maybe you say, I don't want to wait to get in right at demand. I want to wait for a pop higher. I want to see it come out of that demand zone. I want to see more confirmation that price is going to continue higher. And so when you do that, what you're doing is you're decreasing your risk reward, right? You're sacrificing your entry. Maybe you end up getting an entry up here, okay? Because at this point, now you see price is moving away from your demand, right? So you're sacrificing your risk reward, but you have the increased win rate, because you're getting that confirmation of, oh, price is now moving higher. There's a better chance that we're going to continue higher. So that's all you're doing. That was a simple fix that I did. I started waiting for confirmation, saying, well, let me just not shoot for crazy risk rewards. Let me just take a piece of the move, okay? And let me just, wait till price tells me what it wants to do and then go with the trend, right? So that's all I did, right? And you can think about it like this, right? If price, let's say we get it up here. Okay, price comes down, we put our stop down here, okay? We can still take, let's say we have, a target up here, we can still get a 1-to-1 risk reward right here. There's nothing wrong with this trade. This is the type of trades that I started taking that started actually helping me win a lot more, okay, as opposed to just going like this, going for this, and then going for some crazy, crazy move all the way up here. Now, Google ended up working out here, right? But there's other examples I can show you where that didn't work out, okay? So doing this absolutely changed my trading, because I was able to simply let my win percentage go higher and sacrifice a little bit of the risk reward. And not only did that help me with that, but it really helped me with my emotions as well, because I was able to say, well, okay, I'm having a lot more base hits, a lot more wins. That's going to give me a lot more trust and confidence in my strategy, which emotionally is going to help me deliver on those results. Okay, so everything ties into each other, and it's extremely important that you figure out what risk rewards work best for you. Because something like this, and this is another thing as well. If I get in here, stop down here, and I just go for a 1-to-1 or 1-to-1.5, and I get out like right here, and I see price keep going up and up and up, and I'm like, oh my god, I could have held and made a lot more. I don't care. Like, who cares? Like, all you're trying to do is get a piece of the move. Okay, and even if you miss this entry here, right? Even if you were so confident, you said, okay, you know what? I'm not even going to wait till price goes higher. I'm going to wait for price to make a lower low and another lower high. And that's my extreme confirmation. If this happens, if price breaks this high and we start to see price make an uptrend again, that gives me so much confidence that price is going to move higher. So you could even take a trade like this, where you're getting in long here, stop at the low, just go for a quick 1-to-1, right? Take your profit right up here. And then, like, yeah, it kept going higher, but who cares, right? You made money. And the point I'm trying to get across is that you don't need to go for crazy risk rewards, and you don't need to try and catch bottoms and tops, because rarely that's ever going to happen, right? On this entire move here, right? My original thesis, think about this. My original trade thesis, my reason for getting in was a demand zone all the way down here. My original entry would have been all the way down here. But on this like hypothetical trade, right? I'm only getting this piece of the move. I'm only getting, from right here to right here. Out of this entire move here. That's all I'm doing. I'm just taking a piece of the move, getting in, getting out, and walking away. I don't care what it does after that. This can squeeze higher, it can squeeze down. I don't care, right? And that's the huge kicker that really changed my trading, just being able to say, okay, I'm just going to get a piece of the move and walk away. Let me show you another example here on TTD, right? A few different examples. So look at this. We got a beautiful demand zone here, okay? We come down, we tap it, we end up rallying all the way higher. Now, assuming I missed the zone, right, or I could have got in right here, again, still would have worked out, still would have been a great trade to buy here and sell up here. But let's say I missed it. Let's say I wanted more confirmation. I said, okay, I don't really trust this demand zone. I want to see price rebound, go higher before I look to get in. So if we zoom in, let me zoom out here, scroll in a little bit. This is another trade that I easily could have taken, right? Think about this entire move that happens. Okay, we have this low all the way up to this high. Okay, it's a massive move from about $50 to 62. It's about $12 move. Okay, what you could do is say, okay, yeah, I could go for a trade like this. Get long here, stop there, target all the way up here. Now, obviously, in this example, it would have worked out, would have been a good trade, but most of the time, you're never going to be accurate, and that's not always going to be the case, right? So something, if I wanted to be a little more cautious, have a better risk, or not as good risk reward, but have more confirmation that this would work out, is something like this. I would say, okay, we finally got that bounce, we pushed higher, I'm pretty confident we're going to move a little bit higher now. So then all you simply do is say, okay, I'm going to wait for a pullback down to this demand zone here, just like that, right? Get long here, stop there. And you can still get a 1.5 hour trade targeting this high right here. And again, that's all I'm doing. Look, like this is, I'm getting just a tiny piece from there to right there. Tiny piece of the move. Out of this entire move, I'm taking, was it 2 points? Not even like 2-3 points out of a 12-point move from my original thesis. And this is going to help your win rate so much. You're going to make a lot more wins simply by cutting down, not focusing on getting into the bottom and the exact top. That is going to make you a lot more money. And even, this is crazy too, I could have took it one step further and said, okay, you know what? I'm not even going to get in at this demand. I'm going to wait again till we go higher. I'm going to wait for the break of this high. And you can do something like this. Say, okay, get in at the break here. Just maybe stop at this low. Right? Maybe you put a stop right below this demand here. Right? Now you're looking at a 1.5 hour trade up to here. Right? Target at this supply. You can even go for a 1-to-1. Right? There's nothing wrong with that. Again, my original thesis is playing off of this demand here, but my entry was all the way up here. My target was right here. This is like a point. I got 1 point out of this 12-point move, and I don't care. Like, that's the thing I'm trying to get you guys to realize. It doesn't matter. You don't need to go for these crazy risk rewards, because the odds of you catching this exact bottom and getting out at this exact top is so unlikely. It is so unlikely. Very rarely will you ever catch the exact bottom and the exact top move, okay? And trying to guess where that bottom and top is going to happen is so hard. Why make it so hard on yourself when you literally just say, okay, I'm going to wait for the bottom to form, I'm going to catch a little piece in the middle, and then if it keeps going higher, it keeps going higher. You know, what you can do on in the future is when you start to size up, get out, you know, multiple contracts here and then hold a few runners to leave that if you want to go for the bigger risk rewards. But at the end of the day, guys, you don't need to listen to anyone who says you need a 3-4 risk reward. You don't need anything. Okay, what you need is a profitable strategy. And at the end of the day, if your win rate and your risk reward makes sense to a strategy that's profitable, that's all you need. Okay, you don't need anything else. All right, so I hope you guys did enjoy this video. If you did, leave a comment below other videos I should make. Leave a like, subscribe. I'll see you all inside the next video.